All right, so this week we've got a real classic market puzzle on our hands. The Vietnamese stock index, the VNI, it's getting pulled in two completely different directions. On one side, you've got these scary global headlines, right? And on the other, you've got this surprisingly strong economy right here at home. So the big question is, which one's going to win out? Let's break it all down.
Okay, so here's the question that's probably on your mind, right? Does all this global uncertainty spell trouble for the VNI? Or is there maybe a hidden opportunity here for those of us who know where to look? That's exactly what we're here to unpack.
First things first, let's zoom out and look at the world stage. Because, honestly, to even begin to understand where the market might be going, you have to get a handle on the totally confusing back-and-forth signals we've been getting. It's like a textbook case of market whiplash.
You know, it's wild. The market ended last week on such a massive high note. I mean, Friday, we get these reports of positive peace talks, and boom! A huge wave of optimism just washes over the global markets. But then the weekend happens, and that whole feeling just completely flips on its head. We get these conflicting statements, the threat of escalation is back on the table, and suddenly everyone's just left scratching their heads wondering what in the world happens next.
And wow, that initial optimism, it was incredibly powerful. I mean, just look at Friday's reaction. It tells you the whole story. You had US and European markets just surging, and oil, which as you know is a huge indicator of geopolitical tension, it dropped. And not just a little, it dropped significantly. To me, that's a crystal clear signal. The market is absolutely desperate for good news. It's just coiled up, ready to rally hard on even the slightest hint of it.
But here's the interesting part. Even with all that weekend drama and uncertainty, the underlying view from a lot of analysts is that, hey, this is probably not some long-term crisis. The general consensus seems to be that the conflict is really in its final stages. It's likely going to resolve itself pretty soon. And that short-term outlook, well, that is absolutely key to understanding the market's potential path. Okay, so that's the global scene. Now let's bring it back home and pivot to the domestic story here in Vietnam. Because while the rest of the world is, super volatile, our economy is basically acting like this powerful shock absorber. And it's this internal strength that could be the very foundation that keeps the VNI steady while things get turbulent.
So you're probably asking, what are these strengths exactly? Well, let's tick them off. First up, you've got government tax policies keeping fuel prices stable. That's huge because it helps keep inflation in check and protects company profits. Second, interest rates are staying low. That makes it cheaper for businesses to borrow money and, invest in growing their operations. Third, we're heading right into what everyone expects to be a really strong Q1 earnings season, which gives the market a fundamental boost. And then finally, just looking at the big picture, the country has gotten way more resilient at handling these kinds of external shocks, having already adapted and locked in other energy sources.
So, okay, you've got global jitters on one side and this solid domestic foundation on the other. So what does all this actually mean for the VNI index itself? What's the most likely path forward from here?
Well, the way to think about it is through that famous Vietnamese saying, Sau cơn mưa, trời lại sáng. After the rain, the sky brightens. And that really gets to the core idea here. A big market crash? Probably not going to happen. Instead, the most likely thing we'll see is a healthy correction. A pullback, where the market just finds its footing before it gears up for the next move higher.
And when we talk about finding its footing, there's one number you really need to keep in mind, 1750. Technically speaking, that zone between 1750 and 1760, that's the 50-day moving average. For all of you who follow the charts, you know that's a very, very strong support level for the index. This is the floor. This is the level we're all going to be watching.
So let's play this out. Even in what we could call a realistic worst-case scenario, here's what it probably looks like. The VNI pulls back a bit. It fills in those price gaps that got left behind during that super fast rally we saw back on April 14th and 15th. Then it finds solid support right around that 1750 level we just talked about. And from there, it starts building a new base for the next leg up. So think of it more like a reset, not a rout.
And this brings us to the really exciting part, the opportunity. Because it's during these quiet periods of accumulation that the next market leaders start to emerge. The real key, the trick, is to identify which stocks are getting ready to lead the charge once the storm passes and the sky inevitably clears.
So how do you find them? Well, there's kind of a formula for it, a winning formula. You're looking for a combination of two specific things. First, you want a strong technical setup, a really solid base of accumulation. Second, you need strong fundamentals. We're talking great Q1 results that are driven by the company's own internal strength, not just some temporary bump they got from all the external chaos.
Let me give you a perfect example. Take a look at Mobile World Group, or MWG. It is a textbook case study. Look at the pattern here. It spent weeks just quietly building this really solid base. And then, last Friday, bam! It broke out, and on huge volume, too. That is a classic technical signal that tells you the stock has probably found its bottom and is starting its climb back to where it was before all this started.
And what's cool is MWG isn't the only one. We're seeing the same pattern pop up across a bunch of key stocks. You've got VHM in real estate, which is also broken out. But what's really fascinating to me is how consistent this pattern is across the entire banking sector. I'm talking CTG, BIDV, MBB. They're all drawing these very similar, very strong base patterns. And what that tells me is there's broad investor confidence that the banks are going to be the direct winners in a stable, low-interest rate economy. The whole group looks like it's getting positioned for a potential move.
So, if there's one thing to take away from all this, it's this. You need to watch the stocks that recover first. The ones that are the quickest to pop, to break out from their bases and get back to where they were trading before all the headlines hit. Those are the stocks that have the real potential to become the market's next super stocks. So, as we all head into this new week, the question really isn't about whether you should be scared of the headlines. The real question is how you can use this framework to your advantage. If you focus on that combination of a solid technical base and real fundamental strength, you can start to spot these potential leaders before everyone else. So the only question I have left for you is, where are you going to find the next one?